Good morning. Thank you for joining today's daily webinar here at 10 a.m. Pacific time. We're going to have another one of these today at 1 p.m. Pacific time. We're live generally every day, a couple times a day. The first one at 10 a.m. Pacific time and the second one at 1 p.m. Pacific time. As always, you can join our community. You don't have to be a client to join. Our community site is mysolo401k.net /my community. We have over 30,000 members there. We're constantly posting on forums. We have a large video catalog there and a large number of guest blog posts as well. So today we're going to talk about the self-directed 401k plan, also known as a self-directed solo 401k plan. To qualify for a self-directed 401k plan, you have to be self-employed with no full-time non-owner W-2 employee work 1,000 hours or more in the business. The spouse can also participate in the solo 401k plan. Here's an example of a one participant plan where there's just one individual listed on the plan. This can choose to make any of these contribution types, whether it's pre-tax, Roth, or the voluntary after-tax solo 401k contribution, which is part of the mega backboard. So this is an example of a one participant self-directed 401k plan. Here's an example of a two participant self-directed 401k. For example, both spouses work under the same self-employed business. The business sponsors the self-directed 401k. And as you can see here, there's a total of 6 holding accounts, aka brokerage accounts or bank accounts, the solo 401k plan if you have two participants in the plan. So here, using the example of two spouses, each would have their own separate pre-tax, Roth, and voluntary after-tax holding account. So that's where you see a total of 6 here. It's important to note that the self-directed 401k that we offer allows for all these contribution types. So when the plan is drafted, it's already drafted to allow for all these contribution types. Therefore, you're not required to make all these contribution types right away. You can make them later on. The same is true. You may only want to open a pre-tax, a Roth, or voluntary after-tax brokerage or bank account for one spouse now, but you may want to do it for the other spouse down the road. Or another example is one participant may just want to make voluntary after-tax 401k contributions. Therefore, only one bank account would be needed to hold voluntary after-tax self-directed 401k contributions. But then, if you convert it to a Roth IRA, then you would need a separate Roth IRA. But if you convert it to the Roth self-directed 401k, then there would be an additional bank or brokerage account to hold those conversion amounts from the voluntary after-tax self-directed 401k. Now, a checklist for eligibility for opening a self-directed 401k. So, some common questions we get from prospective clients that are exploring opening up a self-directed 401k, also known as a solo 401k plan, is, do I need a formal business entity in order to open a self-directed 401k? The answer is no. What that means is you need to be doing self-employment activity. It doesn't have to be through a formal entity such as an LLC or an S corporation. In other words, it could be a Schedule C where you're a sole proprietor and you're doing self-employment activity under your name, and therefore you file a Schedule C. So the key is that you're doing self-employment activity. It does not matter the entity type. Same is true if you're a farmer. If you're a farmer, you typically file a Schedule F if you or have a formal entity. So the eligibility would be based on the material services you're doing, not necessarily on the entity type. You also need to make sure you are reporting your gains and losses from your self-employment activity. You need to report those on your taxes, and it just depends on how your self-employed tax with respect to what you would file. As I mentioned earlier, both spouses can participate in the plan as long as they're both working under the same business. Oftentimes, we have clients that already participate in a full-time employer 401k through their day job. And then they also do some part-time self-employment activity on the side. So they're able to open up a self-directed 401k. And a lot of times, those type of individuals that participate in both a traditional 401k through their daytime job and then a self-directed 401k, they will make mega backdoor Roth, solo 401k contributions to that self-directed 401k, whereby they make the voluntary after-tax contribution to the self-directed 401k and then subsequently convert it to the Roth self-directed 401k. So you're able to actually maximize your voluntary after-tax contributions to your self-directed 401k, regardless if you contribute the full amount to your income employer 401k. Of course, you're going to need enough net self-employment income to justify that voluntary after-tax contribution to the self-directed 401k, which is for 2025 is $70,000. So, for instance, if your self-employed business is tagged as an S corporation, you can contribute. If you report 70,000 of W-2 wages for that self-employed S corporation, you can contribute that entire $70,000 to the voluntary after-tax self-directed 401k and then convert it to the MOP self-directed 401k. That's even if you that's true even if you maximize your daytime employee and employer contributions up to the overall limit of 70,000 for 2025. So that's pretty unique with the self-directed 401k. Hence why a lot of our clients like to utilize the mega backdoor self-directed Roth 401k. Now, the self-directed 401k is technically a retirement trust. Therefore, it will have its own separate employer identification number. You cannot use your business EIN or your social. So it'll have its own unique employer identification number, which we'll obtain as part of the setup process. Now let's talk about some self-directed 401k top compliance items to understand. So as I touched on already, self-directed 401k is for owner-only businesses. So you cannot have any full-time non-owner common law W-2 employees work 1,000 hours or more. Also, with the self-directed 401k, you can make a lot of different types of investments. Not only can you make traditional investments like equities, such as stocks and index funds or exchange traded funds or bonds and CDs, but you can also invest the self-directed 401k in alternative investments. Our plan is one-stop shop, and that the self-directed 401k plan that we offer allows you to invest in both traditional investments and alternative investments. Here are some examples of alternative investments. So real estate, whether it's residential, commercial, land, foreclosures, rehabs. You can also invest in promissory notes, so mortgages, so deeds of trust. It can be secured or unsecured promissory note, car paper, commercial paper. Other common self-directed investments are metals, Bitcoin, so cryptocurrency, tax liens, tax deeds, judgments, life settlements, factoring, receivables, private equity, crowdfunding, foreign currency. As you can see, it's a very robust self-directed 401k offered by my solo 401k financial. Now, of course, when you're investing in a self-directed 401k, also known as a self-directed solo 401k, and alternative investments, you need to be aware of prohibited transactions. So common investments that you need to really be aware of what the prohibited transactions are: real estate investments placed under the self-directed 401k, as well as promissory notes. So, some examples of prohibited transactions in the context of real estate is, let's say you own a house personally already or through your own business. You're not going to be able to sell that house through your self-directed 401k. That would be a prohibited transaction. You also cannot use the self-directed 401k that owns a piece of real estate as security for a loan or personal loan. Let's say you own a commercial building in your self-directed 401k, and now you want to go out there and buy a house personally, and the bank is asking about how you're going to secure a bank loan yourself so you can purchase that personal residence. You're not going to be able to use any of the self-directed 401k assets as security or a personal loan to you from the bank. Don't get confused, because we're not talking about self-directed 401k participant loans where you borrow from the self-directed 401k. In this example, you're borrowing from a bank and you're trying to use the investments in your existing self-directed as security for that personal loan from the bank. Another example of a disallowed or prohibited transaction when you invest in self-directed 401k in real estate is you cannot use that self-directed 401k owned property for personal use. So let's say you buy a rental through your self-directed 401k and you want to use it for one day out of the year or even a week out of the year. You're not allowed at any time personal use, nor can you use it for your extended stay. So it can only be used, that property has to be rented out to non-disqualified parties. And we'll talk about that more in a moment. An example of prohibited transactions in the context of a promissory note where the self-directed 401k owns that promissory note. So you cannot loan the self-directed 401k funds to your children, your parents. Essentially, they fall under the disqualified party umbrella. So even if you charge a fair market rate, it's still prohibited. Another example of a prohibited transaction is you cannot loan your self-directed 401k funds to your business. That's not allowed. Nor can you loan the self-directed 401k to your spouse's business. Let's say your spouse is self-employed in a separate business and the business needs some capital so that she can expand that business. Unfortunately, you cannot loan your self-directed 401k funds to her business. Now, however, you as a participant can borrow from your self-directed 401k. We'll talk about this more in a little bit through a self-directed 401k participant loan. So you borrow from the plan, and then you can use those funds however you wish after the fact. You can even loan them to your spouse's business at that point, because that would be a loan from you personally to your spouse's business. So that's an example of where you are allowed to borrow from the 401k. So you can even take a participant loan for yourself to 401k. We'll cover that more here in a little bit. Now let's talk about why anyone would want to open up a self-directed 401k, aka solo 401k. And we kind of hit on some of these already. So again, invest in not only traditional investments but also alternative investments. And the alternative investments can be placed by writing a check or by wire. That's why you oftentimes hear the terminology self-directed 401k with checkbook control, wire control, because that's essentially saying that, hey, you're going to be able to make those investments and alternative investments rather quickly because you're going to be able to do it by writing a check or by wire. So promissory notes, precious metals, real estate, private syndicates are an example of those alternative investments that can be made under a self-directed 401k. Now, here's an example of disallowed investment. So with the self-directed 401k, you can virtually invest in any type of investment out there, but there are some disallowed investments out there. So an example of disallowed investments would be work of art, alcoholic beverages, rugs, antiques, stamps, gems like diamonds, emeralds. Those are all disallowed. Music instruments, certain types of metals, certain types of precious metals that don't meet the purity of 99.99%, certain types of coins, and also other tangible property like a car. You can invest your self-directed 401k in a car. You can invest in car paper, but the 401k cannot own an actual vehicle, whether it's a car or a commercial vehicle for that matter. Here's an example of disqualified self-directed 401k. So your spouse is a disqualified party. So these are individuals that you cannot invest self-directed 401k funds into a real estate, for instance, and then those individuals want to use that property. Your adopted parents, your natural children, spouses of your natural children, and then any individuals providing services to your solo 401k plan, aka self-directed 401k plan. So you can't loan your self-directed funds to your solo 401k provider, for example. Your self-directed 401k provider is a disqualified party. Nor can your self-directed 401k provider or even your CPA or attorney, they can't rent a property that's owned by your self-directed 401k because they are providing services to your self-directed 401k. And of course, you cannot invest a 401k in entities uh, where you've got family members. So a corporation, partnership, trust, state, commercial paper. So it's important to understand these disqualified parties here when investing in alternative investments. Now, a self-directed 401k does allow for high contribution amounts. For instance, for 2025, the overall contribution limit is $70,000. You can also make Roth employee 401k contributions, as well as pre-tax and Roth employer 401k contributions, and of course, voluntary after-tax contributions. That's part of the mega backdoor. So here are some limits for 2024. Overall contribution limits to the self-directed 401k for 2024 is $69,000. It increased by $1,000 for 2025 to $70,000. Catch-up contribution for those age 50 or older stayed the same for 2025 as in 2024, so it's $7,500. However, resulting from Secure 2.0 Act, Congress introduced, which is effective for January 1st, 2025, a super catch-up for those who are age 60, 61, 62, or 63. So instead of contributing the $7,500 catch-up, you can do the $11,250 catch-up for those that fall under this category. Of course, you can contribute both. You can either do the $7,500 or the $11,250. And again, it's only available for people who are for self-directed 401k participants who are age 60, 61, 62, or 63 in 2025. So it cannot be done for 2024. For 2024, the normal catch-up is $7,500 for those age 50 or older. Now, with the self-directed 401k, you can also borrow from the plan through a 401k participant loan. You can borrow 50% of the self-directed balance, up to $50,000. So $50,000 is the maximum that each participant can borrow from their respective self-directed 401k funds. The loan term is generally 5 years for all loan types, unless it's going to be Unless the funds are going to be used towards the purchase of your primary residence, then you can borrow the same amount, but you can extend it to 30 years. So you can pay that loan back over a 30-year period if the proceeds are used towards the purchase of your primary residence. Here are some of the loan requirements. So we will draft the loan, the subdirected 401k loan documents as part of our ongoing support. It's got to be a specific loan document with specific language. There's also a loan agreement, there's a loan payment amortization schedule. So these three documents are required by the government in order to have a valid self-directed 401k participant loan. And here are some of the rules. We have a lot of rules regarding the 401k participant loan on our website. Here are just some of those self-directed 401k participant loan rules. So the payments are double payments consisting of principal and interest, where it's typically monthly or quarterly. You can choose whether you want to make monthly or quarterly payments. And it's got to be repaid every month or every or every 3 months, so over a 5-year period, unless you use it towards the purchase of your primary residence, then you make those monthly or quarterly payments for a 30-year period if it's for your primary residence. So the loan limit cannot exceed a statutory limit of 50% of your account balance or a maximum of $50,000. And the loan interest is typically the prime rate, and then you add 2% to that. It can be 2% or 1%. Generally, you'll add 1%. It's a fixed rate. So once the loan is processed, that rate does not fluctuate. It'll be fixed for the life of the loan. Now, clients will often open a self-directed 401k, and they'll use it to consolidate other retirement funds into the plan, where they'll transfer a former employer plan or a thrift savings plan, a 403b plan, a defined benefit plan, profit sharing plan, 457b governmental plan, pension, etc. They will also transfer additional IRAs, SIP IRAs, simple IRAs, the solo 401k plan, APS self-directed 401k, for consolidated retirement. One important item to go over here in the context of investing in real estate in your self-directed 401k is that it's not going to be subject to unrelated debt finance income tax, which is a tax that's typically about 38% that applies to self-directed IRAs, but not self-directed 401k. So a self-directed 401k that invests in real estate can utilize a non-recourse loan, where the self-directed 401k gets a loan from a bank or a third party, and then it uses those funds to invest in that particular property. That's where this unrelated debt finance income tax does not come into play. So that's great about the self-directed 401k, that it's not subject to that unrelated debt finance income tax like self-directed IRAs are. The self-directed 401k allows for conversions, whether you're converting pre-tax self-directed 401k funds to the self-directed Roth 401k, or if you're doing the backdoor, where you're making voluntary after-tax contributions to the self-directed 401k and then immediately convert that to the self-directed Roth 401k. That's known as the mega backdoor Roth conversion. And here's the slide here that goes over those steps regarding the mega backdoor self-directed Roth 401k. Step one is you make that contribution, that voluntary after-tax contribution into the designated voluntary after-tax bucket under that self-directed 401k. So you got to open that bank or brokerage account to hold those voluntary after-tax funds. You make the contribution into that dedicated bank or brokerage account to hold those voluntary after-tax self-directed 401k funds. And then step three is where you actually convert those self-directed voluntary after-tax 401k contributions either to a Roth IRA or to the self-directed Roth 401k. And under step number four is we need to collect the necessary information to document that conversion. We fill out our online conversion form so we collect the necessary information. Finish up step number 5, where we will issue the Form 1099-R to report that non-taxable mega backdoor Roth, self-directed Roth 401k conversion. Now, with the self-directed 401k, you get to choose where to hold the funds. It can be at your local bank, or it can be at a brokerage firm like Fidelity or Charles Schwab. Many of our clients will use Schwab or Fidelity for their self-directed 401k because they want to be able to do everything in one umbrella, but they'll be able to invest not only in traditional investments like equities, they can also invest in real estate, promissory notes, for example. Both Fidelity and Charles Schwab will open up both accounts for self-directed 401k offered by my solo 401k. We've been open for that for many, many years. We'll actually help our clients get up. We have a great page on our website that compares Fidelity versus Schwab for the self-directed 401k and self-directed 401k holding of the funds. One, one thing to know here that comes to mind when we're trying to compare Fidelity versus Schwab is more at the contribution level. Fidelity, you can actually link your bank account to your Fidelity brokerage accounts under the self-directed 401k via ACH so that contributions can be made electronically. With Schwab, they make it a little more tough, whereby you're not going to be able to link your bank account to that Schwab brokerage account or brokerage account unless you open up a separate brokerage account at Schwab in your personal name or your business. Then you can link that brokerage account to that Schwab brokerage account. So a little bit of a roundabout way. But other than that feature there, Fidelity and Schwab are pretty much identical with regards to which one you should use to hold your self-directed 401k funds. Now, the self-directed 401k does have the $1,500 auto contribution credit. So not all self-directed 401k providers will provide that type of plan. For example, traditional firms like Fidelity and Schwab will provide that type of auto contribution credit for their solo 401k plans. However, if you use a self-directed 401k plan, aka solo 401k for my solo 401k financial, we'll draft those plan documents that allow for that auto contribution credit. Now, it's important to note that the auto contribution credit was not available until the end of 2023. Therefore, if you're an existing client, we can also add the auto contribution credit to your plan, but you'll need to submit a certificate. And if you're an existing client and open a self-directed 401k plan, aka solo 401k plan with us prior to December, the middle of December of 2023, then your plan is going to need to be amended. You can submit a support ticket. We can amend your plan to allow for it. But any new plan that's open now, it will have the auto contribution built into it now that it's available. Here's more information about the auto contribution credit. So it's a total of $1,500 spread out over 2 years, and it's a dollar for dollar tax credit. So anyone that opens a self-directed 401k here in 2025 or has their self-directed 401k plan amended, if you're an existing client, 2025 will be the first year that that $500 credit is available. And then you have another one available in 2026, and the third one in 2027 for a total of $1,500. What's great about the auto contribution credit is that it's not going to subject you to having to make contributions to the self-directed 401k. So you can actually opt out of making contributions. And you can still contribute any percentage you want up to the overall limit, of course. But it's good to know that you're not required to contribute to that self-directed 401k to qualify for that $1,500 auto contribution credit. and you're going to file Form 8881. It's a two-page form each year to claim that $500 auto contribution credit. It's $500 per year for 3 years, a total of $1,500. You can learn more about the auto contribution self-directed 401k credit under Section 45, so Code Section 45T, and also known as 2020-68. This slide here just gives you an example. If you if you are an existing client, for instance, you convert. Excuse me. Yeah. Well, let me be more specific here. This slide here is if you have an existing solo 401k plan. Let's say you have an existing solo 401k plan, Census, Fidelity, or Schwab, and you want to convert that plan in 2025 to a self-directed 401k, aka self-directed solo 401k. My solo 401k financial here in 2025, and you're going to qualify for that $500 auto contribution credit in 2025. It will continue in $500 increments into 2026 and 2027. So, and then if you sign up for a new self-directed 401k by the end of this year, then you're going to qualify for that auto contribution credit as well. So you just need to make sure you sign up for a self-directed 401k by the end of this year, so that you qualify for that auto contribution credit when you file your taxes in 2026 or 2025. Now, one of the main reasons individuals will use my solo 401k financial for their self-directed 401k versus other individuals out there is we don't charge to provide compliance support going forward. In other words, our annual fee of $125 is not for providing compliance support, it's actually for being the solo 401k provider. However, we will provide ongoing compliance support at no additional cost. So some of that compliance support that we'll perform is 1099-hour reporting, which comes into play if you take a distribution from your self-directed 401k, or if you process a conversion of a mega backdoor, for instance, or a conversion of pre-tax 401k funds to the Roth 401k. We'll also prepare Form 5500 Easy as part of ongoing support. Form 5500 Easy is a tax informational return that applies to self-directed 401ks once the value of the plan is greater than 250,000 of the plan year. You have to take into account all of the participants' funds and all the different fund sources in the plan to determine the market value of that 401k. So if you had all your voluntary after-tax funds, pre-tax, Roth funds, and if both spouses are participating in the plan, you have to add all those funds, because remember, it's just one plan. You add all those funds to determine if that greater than $250,000 threshold has been met. So for example, if your plan year is December 31st, therefore the market value of your self-directed 401k was greater than 250,000 as of December 31st of 2024, Form 5500 Easy needs to be filed with the government by July 31st of 2025. So here in the next several months. So you need to let us know once it reaches that milestone, because keep in mind, we don't have access to our clients' funds, and that's by design. We don't need access to your funds. So it's important that you let us know as the trustee of the 401k that you communicate to us once $99 issue, as well as a full 5500 Easy. And as long as you timely communicate to us that one returns is needed or both of these returns are needed, then we will prepare and file these electronically with the government for you. So that's one of the great things about our service is that as long as you communicate with us, we'll gladly prepare these returns at no additional cost, which is a lot different than many of our competitors out there. They'll charge you an additional fee. any of these returns. Whereas we include this type of service in our flat annual fee of $125 as long as you timely request it. We'll also help existing clients with opening up brokerage accounts for the self-directed 401k, whether it's a Schwab or Fidelity, for example. If you want to use your local bank, we'll provide the necessary information to take to that local bank, and we can speak to your banker so he or she understands the process. Other self-directed 401k, aka self-directed 401k for my solo 401k financials that will allow for participant loans. We went in depth over that earlier. We'll also consult on the rules and regulations, kind of like we do here on a daily basis when we have our 2 p.m. webinars, one at 10 a.m., the second one at 1 p.m. Pacific time. You can also email us, you can submit support tickets. So we'll consult on those rules and regulations, whether we're talking about distributions, conversions, investments, such as alternative investments like real estate. We get a lot of questions about the prohibited transaction rules when investing in self-directed 401k in real estate, or even precious metals, cryptocurrency. We'll also consult on the self-directed IRA regulations. We're very knowledgeable on the self-directed IRA regulations, including the Checkbook IRA regulations and IRA LLC regulations. We've been in business for a long time, so we pretty much do everything under the sun. And of course, our self-directed 401k plan can be drafted to include both participants in the plan. If we're talking about an owner-only business where both spouses are participating in the plan, and of course, it comes with that auto contribution credit of $1,500 feature for new plans that are opened up. And it can be added to existing clients, which means that if you open a self 401k, 401k with us back in prior to December of 2023, your plan would need to be amended, as I mentioned earlier. Okay, so these are some of those slides I wanted to go over. Let's turn over to our live chat for some good questions. Let's see here. Got a question here from Sarah. Good morning. Good morning to you too. What kind of forms do I need to request for 2024 if I just roll over my previous employer 401k into a pre-tax and Roth account at Fidelity? Rollover happened on January 15th. I'm planning on making more contributions for 2024, but want to talk to my advisor first. Do I need to ask for Form 5500 easy? I am above the amount. So great questions here. Let's dissect the questions here. So if you transfer a former employer 401k or even an IRA to the self-directed 401k, then that's going to result in issuing a Form 1099-R. And that gets issued by the institution that processes the transfer. So if it's a former employer plan, your former employer plan administrator is going to issue that 1099-R. And if you just transfer those funds this year, they're going to issue that Form 1099-R next January, February of 2026. If you had actually transferred self-directed 401k funds out of the solo 401k fund that you have with us to an IRA, then we would issue the Form 1099-R. But in this situation, it's the other way around. You're transferring your former employer plan to the self-directed 401k. So the former employer plan administrator is the one that would issue that Form 1099-R. See here, if you want to make contributions to the self-directed 401k plan for 2024, you certainly have plenty of time. You have until your business tax return due date, plus timely filed extension to make both employee and employer contributions, because it looks like you adopted this plan with us by December 31st of 2024. With respect to the Form 5500 easy, if it's going to reach that $250,000 milestone, that is that greater than $250,000 milestone here in 2025 by December 31st, then yes, you need to let us know. So go ahead and send us an email to business@mysolo401k.net, and we'll make sure to provide you with what we need to add you to our annual 500 preparation list. But it sounds like you don't need one for 2024 because you are just now funding that self-directed 401k in 2025 for the first time. But if it does reach that greater than $250,000 value by the end of this year, then yes, one Form 5500 easy will need to be filed by July 31st of next year, so 2026, and we'll prepare that and file that for you electronically with the government. Another question here from Sarah. To make sure that I get the first 3-year tax credit for 2024, do I need to change my account to that amount of contribution? I don't believe I selected auto contribution when I initially set it up. No, you don't, because anyone that opened a self-directed 401k with us, aka solo 401k, after December of 2023, our plan has already been drafted and the necessary forms have already been prepared to allow for the auto contribution credit. So in short, your plan does not need any other updates since you opened the plan with us at the end of 2024 when the auto contribution credit was available. So you'll be able to start taking advantage of it actually here when you file your taxes in 2025 for 2024. So that will be a $500 amount. You'll file Form 8881. Then you'll file another Form 8881 next year in 2026 for another $500. And a final Form 8881 in 2026, excuse me, 2026 for the final $500 auto contribution credit. So you got one for 2024, second one for 2025, and a third one for 2026 for a total of $1,500. Another good question from Sarah. I want to invest in a private real estate syndication for my new Roth Solo 401k at Fidelity. Am I able to invest in it directly from Fidelity? Yes, you are. Let me get that. Let me send you a procedure for that. You are. Let me pull up that procedure specific to Fidelity. Um, you'll be able to get those funds wired from that Fidelity brokerage account, aka investment only non-prototype brokerage account, to the private investment sponsor for making that investment. Let me share that page here. And I'll show that here in a second. Let's finish answering the question here. The syndication is asking if my solo 401k trust is disregarded for federal income tax purposes, yes or no. They state disregarded entity for federal tax purposes, an entity that is disregarded and separate from its owner. So yes, it's a disregarded entity technically. I mean, it's a retirement trust. Generally, the whole disregarded entity language is used more for an LLC. But with the self-directed 401k, it's also a retirement trust. So yes, you can check out disregarded entity. Let me pull up the Schedule K1 here because that's what they're going to issue at the end of the year for that private investment. While I do that, here's the link here to Fidelity, for that Fidelity investment. Take a look at that. Let me pull up that Schedule K1. So I'm going to share a link that you're going to want to look at as well. There's also a section on that Schedule K1, I'm trying to locate it, where it actually talks about retirement plans. It looks like it's number 12 in part 3, where it says if this partner is a retirement plan, check this box. There's a box that you would check. Let me share that box. Let me share that post with you. Uh, so, so that's what you'll want to make sure you fill out is that is is when you, or I should say, when you receive that Schedule 1 from the partner for that investment, take a look at that page I just said, but you're going to want to make sure that they fill out that Schedule 1. That's why they're asking these questions here if you're making an investment. So when they so to prepare to file that Schedule 1 at the end of the year. So in review, you're going to want to check off the box that says the partner is a disregarded entity. Check that box. Then where it says 10, you need to put the EIN number for the solo 401k there, aka the self-directed 401k. And then where it says name, you're going to put the name of the self-directed 401k plan there. And where it says what type of entity is this partner, you're going to want to put retirement trust. And then down below under number 12, you need to check the box that says this partner is a retirement plan. Check here. Here's some good information for you. Take a look at that. Okay, let's see if there's some more questions here. Let's see here. Okay, it looks like we've come to the end of our questions today. We really appreciate you joining this morning's self-directed 401k webinar and Q&A. Keep in mind, we'll be back here again today at 1 p.m. Pacific time. Until then, make it a good